Welcome to the Traders Show. This show is brought to you by Pepperstone. Pepperstone is an award-winning online global Forex and CFD broker. It offers unparalleled service, exceptional pricing, and fast execution speed.
Hey guys, welcome to today's podcast, The Traders Show, where we talk everything finance, business, and entrepreneurship. Today we're going to talk about the Kenyan stock market, how you can buy, how to do research, market capitalization, volumes that are traded on a day-to-day basis, what you need to be looking out for. And mainly we're going to do a lot of discussion because we've mainly focused ourselves on Forex. But we also, if you enter any financial industry, if be it Forex, stocks, commodities, cryptos, one way or another, you're going to find yourself oozing into the other markets, okay? So today we'll talk about the Kenyan stock market. We're more familiar with the US stock market, but we'll just do a discussion, maybe share a thing or two that we know about the Kenyan stock market, and I'm sure you'll learn a thing or two. So that's it from me. Yesterday, as we continue, just a market recap. Yesterday we saw the Feds having the strongest, I don't know, there's a word that I'm missing, rate hike since 2009. So they increased the interest rates by 0.5 basis points. And
Since 2000.
Since 2000 or since 2009? I thought it was since 2009. You sure? I will check. It's 2009.
Can confirm.
We'll confirm. So anyway, so we'll have a discussion. So that's what happened in the markets yesterday, and it was quite interesting to watch, seeing interest rates going back to, they're trying to curb the inflation that is happening not only in America but around the world, and also people here in Kenya are sort of facing it. We're seeing how oil prices are going high, prices of goods are going high and all that. But that's on the international markets, just a recap, and I think I'll start off there. Ken?
So hi guys, hope you're doing well. Like Caleb has said, yesterday we saw a Fed rate hike. For me, I was just looking at markets and thinking about the average trader or the guy who's just started trading and assumes that when you have a rate hike, the markets will go down. Instead, what you had was a dollar getting weaker and the pound and other currencies moving higher. That's a basic trade. It's a buy the rumor, sell the fact trade. I think the market had already priced in a 50 basis point rate hike. And what we were actually watching when the Fed chairman was speaking was the dot plot, so what they plan moving forward. And it's quite clear, at least for the next 2-3 months, we don't expect to see any rate hike. Instead, we'll see some quantitative tightening. So some billions will be taken out of the bond buying program. So instead of QE, now we are moving to QT. And what basically that means is we have been a very, very tight fix, I think, long term in the markets.
What's the difference, QE, QT?
QE is pumping of money into the economy, QT is taking money out of the economy. So one is quantitative easing, the other one is tightening.
Yeah, if you listen to Powell, he was saying about reducing their balance sheet, basically how much they spend.
Yeah. So I think moving forward, I expect lower stock prices for me. I think there are very many risks currently in the market. We have QT, which is coming in. We have inflation still as a problem. And the biggest problem that we currently have is Russia-Ukraine. We don't know how long the war will take. I was actually listening and reading some articles, and I was amazed that when the US invaded Afghanistan after the 9/11 instance, they thought they'd been in Afghanistan for a year or two. They ended up staying there 20 years. When World War I started, we thought that the thing will last for a year or two. It lasted more than 5 years. And we don't know how the Russia-Ukraine war will move. We don't know the stand of China. So there's a lot of uncertainty. And besides that uncertainty, we still have high inflation. And the markets are not really pricing in any of these risks. The markets are quite complacent if you just observe the markets. We've seen a down move for Q1. But it's not an aggressive down move. It's a move with some deep pullbacks along the way. But let's see over the next few months how things will develop. That's our world. But for today, like Caleb said again, we're turning into the Kenyan market. The Kenyan market also has some cycles. So if you keep track of Kenyan markets, I personally like looking at them. So I believe as a trader, your job is to allocate risk to any opportunity that you find. But it's also very, very important to stick to your lane, to stick to where you're an expert at. So for us, we're mainly focused on the Kenyan stock market, on the Forex market and the global markets. But sometimes I'll maybe in a week or two just zoom in and see what's happening in my country, my local place, any opportunities, what is currently happening, any cycles, what's affecting markets. And today I thought it's important for us to talk about that market. because many people are not familiar with it, and many people can also make some money out of it. So if you look at 2020 when COVID happened, the stocks went really down. Counters like KCB came from 55 to traders low as 30s, equity the same, and some of those counters have really rebounded after the COVID recovery. So we've seen markets going back to traders high as 40s, 47, 48, 49, 50, and now we are likely to see again a down move. We are getting closer to an election. Elections are not normally very good times for the Kenyan stock market or for the Kenyan stocks. Why? Because of the uncertainty of how we handle our elections here. We don't know if there'll be a war. We don't know if there'll be what Raila does after he's lost. What's that called? Those, like last time we had
the riggings.
1 month where people are just coming to town to complain about the lost election. You remember?
For 1 month.
That time, yeah, for almost a whole month, when people would come into town and protest. I remember actually at one point we were with one of our investors, and she was telling us how she has to close her shops because they don't know what is happening down there. But anyway, the protests. So the Kenyan elections, we handle them in a very, very primitive way. That's the best word I can use. But anyway, we'll see how things will move, and I think investors have to factor in that into the market. And that's the world of politics. I have no experience in it. I am not even obliged to comment about it, but I can obviously share my opinion on how we handle things. So I think we'll start off, but before I do, Lawi will have to introduce himself.
Greetings listeners. It's another episode, another Thursday. We are here to bring you again more content. Basically to just promote the education side in financial markets. And as you can see, we not only focus on what we majorly do, like our 9 to 5 work, basically trying to check on the Forex market, commodity markets, and US basically foreign markets. We've talked about cryptos. We've talked about we had guests here talking about agriculture and business, cryptocurrencies. We've talked a lot about that. Even getting deep into the nitty-gritties of Forex trading, risk management, psychology, importance of chart time and everything. And today, due to people coming into our offices, people requesting that they also want to understand the local market a bit, because we mainly focus on the international markets, but the fact that, as Kenna said, we always try to research about Kenyan markets, just to be at par with them and try to understand which opportunities are there currently in the markets. And for today, we're going to talk about the Kenyan stock market. It's a very, very interesting market, really growing, but still has a lot of challenges. But we're going to discuss the challenges in the Kenyan stock markets, the market capitalizations and everything, how to buy, how to open a CDS account and everything. So we're going to basically shine light into investing in the Kenyan stock markets, because actually I think it's sort of not right that a lot of people, especially young people, are not looking into that as an avenue of investment. A lot of people are even jumping much into cryptos, which is very, very high risks, other than trying to even understand your own local markets. So it's important for you to know at least how can you put a few coins or some of your savings into investing into these stock markets, because the moment you invest into a stock, you literally are an owner of that company. So you have shares in that company. They can pay you dividends if they make profits. So you can easily own a part of Safaricom. Don't just feel like it's something for the big boys and the big fish, no? So even for a young person starting out and learning how to invest, you can put a few of your coins, a few of your savings, of your investment money into stock markets. And you can earn in multiple ways. There are multiple ways you can earn from the stock markets, from dividends to price increase in price levels of your stock. So you can maybe buy something at 20 bob, it goes to 30 shillings and you gain 10 shillings per share. So, and that is, at least I feel like it's an avenue that most of us can get into. It's not really a sort of low risk. It has some risks, of course. No investment is risk-free at all. So we are going to also talk about some risks in them. Why the trajectory of maybe the last 10, 15 years, why some companies have literally gone down after having very, very good years back in 2006, 2007, 2008. Basically before the 2007 election, the stock markets were doing really, really well. Then we went into a downturn and now we are coming back again. So that cycle, we're going to talk about it. shine light into some good companies that you can invest, how to research on these companies, how to read annual reports, and all that. So it's gonna be an interesting podcast to even chat with my boys here, and I'll be glad for you guys to learn from me and from us. Thank you.
Pepperstone gives you access into the global markets with more trading opportunities, first-class customer service, and peace of mind. Withdrawals are quick, and for those in Kenya, M-Pesa is enabled. Pepperstone Markets is regulated by the Capital Markets Authority. To open an account with Pepperstone, you can click the links on the descriptions below.
Cool. So I think Mel start off with comparing what I know about stock market and Forex. So I think it's important for people to know that the Kenyan stock market is open 6 hours a day.
Yeah, around 9:30 to 3:30.
More or less.
Yeah.
And the the Forex market is open 24 hours, 5 days a week. So that's also important to note. So when you're coming to trade the stock market, usiku, when it's Kenyan time at night, you cannot trade them. You cannot, more or less, you can't buy and sell.
The counters are closed.
Yeah, the counters are closed. Apart from that, in terms of volume, I'm not really sure, but in terms of Forex right now, we've reached about a 7.5 around there $trillion. Okay, so not billion, $1 trillion exchanged every single day. When it comes to the Kenyan stock market, if you compare that, you'll see we're very, very small in this big ocean. We do a volume of about $5 million per day, about 500 million Kenyan shillings per day. I was checking it out, so that's what I saw. Apart from that, I think those are just the major ones that you need to know.
Also, I think it's very, very important for people to understand that in the Forex market, in the global markets, you can short sell. In the Kenyan markets, unfortunately, you can't take advantage of
their move.
Markets. Yeah, so you can't really short sell.
Short sell.
There are one or two things that you can short sell, but majority of the things you can't short sell.
Yeah.
Yep.
Yeah. So by short selling, Ken is saying you can't make profits when the market is going down.
Precisely.
You just take your profits that you bought when it was low, you start selling them up there. That's selling. But now short selling is when the markets...
So it's a long only market.
Yeah, it's a long only market, which also sort of course, will make... There are some traders, big traders, who are basically short traders. So such markets won't be very attractive for them because they can't go against the market when it's going up. And yeah, so I think that's a good start.
Okay. So for me, I'd move more into the education side of if you want to like invest in the Kenyan stock market. Again, what's important, because it's not like it's guaranteed that if you invest in the Kenyan stock market, you'll make money. For example, if you had just bought stocks before COVID happened, there's a high chance probably you couldn't ride out the volatility when it was going down because you didn't even understand why it was going down, where it will stop, and how you should ride it out. But for the experienced investor, you could be easily say that, okay, if it's going down, maybe I'll have my stops at this level. If it passes this level, I'll sell out. But if it doesn't get to that level, I'll still hold my position. But I think trading in the Kenyan stock market is quite different from what we personally do. Because if you look at the charts, as we use charts, technical analysis, and a bit of fundamentals to make decisions in the market, when it comes to the Kenyan stock markets, you'll use 80% fundamentals and about 20% charts, because most of the charts are still line charts. I've not seen candlestick charts representing the Safaricom movement. I've not seen them. Unless they're there, I've not seen. I've not seen. And if they're there, I also don't think there are people who are using them, because again, majority of the people who are taking part, and that's one thing that I'd add to what you were saying before. Majority of the people who are taking part in the Kenyan stock market is actually foreign capital. So it's not that the local man is really trying to make money out of that market. Instead, it's big hedge funds again and big investors from outside the country who are taking positions in emerging markets. So according to them, these are called emerging markets. Like they're markets which are still coming up. They are very, very tiny. Because if you look at the African context, there's the African stock something, a compilation of all stock markets in Africa. Kenya is number 3 after South Africa and Cairo. So Egypt and South Africa are the only ones who have a more sophisticated stock market than ours.
And Nigeria
is behind us. I think they have big counters, but they don't have very many counters. You get, that's the difference. So we have about 28 members in that body. Kenya is number 3. And I think that speaks a lot to how much foreign investors may be in love with our market. So when you want now to invest in the Kenyan stock market, now where do you start your education? The NSC has done a very, very good job of coming up with educational programs. I think that one thing I've learned now that I think I'm certain I'd actually advise people, or I will comment on, is we are now living in a world where you don't really need to go to school to learn some things, unfortunately or fortunately. Because if you go to the page on the Kenyan stock market, they have about 5 to 10 modules. And those modules are just being sold at 4,000. And they teach you things like portfolio management, welcome to the bond market,
risk management,
derivatives, stocks. So you learn a lot at less than, let's say, 60,000. And if you have the grit now to just not only learn that, but learn that and add some research on your own, then you can easily understand how markets really work, on top of just tracking the markets. Because I think for them to develop that program, they had to do some research and understand. Part of the reason why most people are not taking part in this market is because people are not educated about it, right? So they had to develop educational programs that will help now people learn how to analyze the markets and make decisions and take positions and look at counters. And I think that's where I'd want to start. So for the guy who wants to start out and they want to learn, first of all, there are those courses which are being offered by the NSC. So you can go to their page and you look at some of the courses. Their website. And some of the courses that they are offering. And they've done a very, very good job of trying to make it as affordable as possible. Because for us, we're offering quite a bit, but it's because we're giving you our time. For them, there's no time, there's no interaction. So it's just a compilation of material, fully online, self-paced, which you just take and you learn. And one of the most important things to learn is portfolio management. So for a starting point, I tell you, if you want to invest in the stock market, it's unlike trading where you have your account where you just take positions and you're out. Because if you think about it, majority of the time, about 99.9% of the time, for us, we are sitting on cash. We're not sitting on any risk, right? But for the one who's invested in the stock market, it's the reverse. 99.9% of the time, they're sitting on stocks and they have maybe little cash to buy when some opportunities come. So it's very, very important when let's say you have $1 million that you want to invest, you don't just put it all in one counter. You can now create a portfolio around different sectors. Maybe you could have banking, you could have telecom, you could have construction, you could have insurance. So you could have a compilation of many things. Nowadays, though, markets tend to move, they are very correlated. I don't know if you guys will agree with me. So there's a high chance if we see a downturn, 80% of these counters will go down at the same time. But I still feel like if you have different counters, you have minimized the risk, because as much as they may go down, the magnitudes of going down are different. The levels of going down are different. So you still will have a diversified portfolio which can really help you understand or protect yourself against downside risks which may arise out of markets.
Okay, that's nice. Background from the education part of it. Actually, NSC is doing a very, very good job in trying to educate. And for me, I like such people because that is also the business we're in, trying to educate people. And kudos to them. If you guys want to learn, also the other people, our friend Clarence Muhoro can also help you in learning how to invest in the stock markets here in Kenya, help you setting up your accounts and everything. So basically, if you just do your due diligence well, you won't miss on a good place to start out. And I think that is where most people, they sort of try to push that blame, not to themselves, but they're like, where do I start? Even in trading, people come into trading. Me and Ken, how we started trading was basically just going to the library and taking a book. And that is how we started. So if you want to get into investments, trust me, no one will spoon feed you if you don't, first of all, get that initiative to look for that knowledge. So there's pretty much knowledge if you just do your due diligence in trying to learn how stock markets work here in Kenya. it's even easier if you're already trading the global markets. Like for us, it's very, very easy now for us to even pivot into trading the Kenyan stock markets and putting some risk into the industry.
And help innovate stuff like the candlesticks.
Yes, exactly.
A lot of innovation that needs to be done by them.
Yeah, but sir, for me, I just went back to look at the deep background into how NSE started, and I was shocked. Actually, it started back in 1920.
Wow, that's a long time ago. When the white man was still
Yes, when the white man was still here.
What was being traded?
But it was still under the British
colony.
Yeah, colony. So
And were Africans allowed to buy at that time?
I think so, of course, yes.
Okay.
So but then in
Which
1954,
companies were listed at that time? Any that still exists today?
I think EABL was there, but it was called Kenya. EABL was there. EABL was one of the companies which was EABL was there.
Kenya Breweries.
Kenya
'cause it was
Breweries
called
Limited.
Kenya Breweries.
KBL,
Has
KBL.
been- it's that old.
Yeah, KBL is from I think 1923. Yeah, so
It's owned by the government.
partly, and some now major investors, and now there are some floating in the NSE now.
Okay.
Yeah. So just looking at that is a long time for this
I'm seeing
market
here
at
it was
least.
started in 1920.
Yeah, to at least develop.
By who?
EABL.
ABL
Yeah.
was founded in 1922 as Kenya Breweries Limited (KBL) by two white settlers, George and Charles Hurst. The company was owned by the Dodd family,
Yeah.
more or less.
So looking at that trajectory, like since that's almost 100 years, actually 100 years, strictly 100 years.
Exactly, they're celebrating 100 this year.
100 this year, exactly. So that is
19?
sort of
22.
Oh, okay.
So 1922 to 2022 right now, that's 100 years of this market trying to develop itself. But still, I feel it's not becoming a very, very competitive market. And I think it's because of basically how the investors, like, because the local people are majorly the investors, like the me and you.
Yeah.
And if you look at even, go and ask 20 of your friends, your age mates, maybe your older people might be having some stocks. But if you look at the younger people, basically people under 30, most of them don't even have any investments in the stocks.
Yeah.
Which I believe is something, as you're saying, is it like lack of clear education, which is they're now trying to solve that? Because like back then, if I don't know how to invest in stocks, I'll actually feel that the risk is too much, so I can't even do that. I better buy land somewhere because I know this land will be there. Like I can't maybe disappear overnight. So 1954, now the British colony now formed the Nairobi Stock Exchange. So they transitioned. I'm not sure about the name before, but they transitioned now to Nairobi Stock Exchange, 1954. And now many local companies now started coming in, and from there now I think up to now we have about 65 companies, which is still very, very little.
Yeah.
Very little.
In 100 years, only 65 companies have gone public at the NSE. Crazy. Too little. Yeah,
That's too little.
too little. So I feel like there's still a lot of opportunity for even like companies to still go public to increase the market share, because I think the market share right now is about 2.2 trillion.
Yeah. Innovations to be done, because I'm so big on to allow short selling.
Yeah, exactly.
They will allow short selling, man. Boy plunger.
Exactly.
Anyways, yeah.
So the fact that we only have 65 companies in the NSE, maybe it even limits the scope of maybe investments, exactly. Because I need maybe a wider range to pick maybe the best 20 or the best 10 to put into an index. So, and I think we have about only 6 or 7 indices. The indices that are traded at the NSE. So still very, very little. We still need more indices coming into NSE. But I was actually not shocked, but I was sort of I wondered how for 100 years we only have 65 companies, but I'm so sure right now as they do more education, as more people come into the business, as younger people are now open to investing into stocks, like I really, really like the initiative Clarence is taking to push more young people to invest into the stock markets, not to feel like it's for old people, it's too much risky, you don't understand it. Exactly. So if you feel like, because most of us, as Clarence, we had Clarence here about 2-3 weeks ago, and he explained to us, like, people think like for you to invest in stocks, you need to be a millionaire.
Yeah.
Like it's not that way. Like
there's a fallacy.
There's a fallacy or a myth exactly about investing in the stock markets. So because
also we used to believe that. Used to think you have to have a lot
of money, to start out. But No, not really. You can start out with 1,000 bob, 2,000 bob, 5,000 bob, and own some. As I said, like you now literally own Safaricom. Yeah, and if they make money, you get your dividends and everything. So that is why I can start just giving that brief background of the market share, the number of indices there, the number of stocks a company is being traded at the NSE, which I'm very, very eager to see maybe how the next 10, 15 years develop. Maybe more companies will come in. Maybe Financial Hub will be going public in the next 15 years maybe. So watch us out maybe at the NSE soon.
IPO.
Yeah, it's called an IPO, initial public offering. And so for me, I can start there, and moving on swiftly, I can now go into maybe how to get into stocks. So how do I start? So most people, yes, umeniambia this everything, but how do I start? And I like also how our local banks are really, really helping grow that market. So I think almost every other bank has an investment wing that allows you to invest in the Kenyan stock markets. And there's this thing called the CDS, so the Central Depository System, that allows traders or investors to get linked to the market. So the central bank has that. You can get it directly from the central bank. And now the Central Depository System is now where basically the exchange happens. The exchange between now the shares you're buying and the money you're giving into those companies. So just go into whatever bank you're using, or go directly into CBK, ask for how to open a CDS account. I think you can even do it online nowadays. Open a CDS account online, so you don't need to even come to Nairobi if you're not here. Just converse with the bank and see how they'll help you open a CDS account, load your money. They give you access to the market, so you'll see the stocks you want to trade. There are also, I think, advisors who can also help you buy these stocks from this investment bank. I think there's Genji's Capital. There's a lot of them. I'm not here to recommend any company, but So opening a CDS account is the first thing you need to do. You have to first have an account with a local bank in Kenya. So you can't open a CDS account if you're not having a local bank. So if you're abroad, or Uganda, Nigeria, Tanzania, and you want to invest in the Kenyan stock markets, you have to find a way to get access to a local bank here in Kenya. Then they'll now help you get that CDS account. The moment you get that CDS account, you load your money, and now they now give you access to the markets. And you now buy your shares. If your shares increase in price, maybe you bought Safaricom back in, I think during COVID, Safaricom was as low as 20 shillings. Yeah. And it went all the way to 43. I see now it's back to about 31 or 32. So it's always a matter of fluctuation in prices. And that is now where I think now trading also comes in. Basically, you can't become a stock trader without knowing how to trade.
Yeah, that's true. Because you have to know when to get out.
When to get out, when to come in, when to add more money.
Yeah.
Exactly. When to cut your losses, add to other companies, maybe know which indices are better than the other indices, knowing I should trade indices and not single stocks. Diversifying, exactly. So it's all about first getting the education. And we always say that there's nothing that comes on a silver platter, especially when it comes to money. Exactly.
Other things may come.
Yes, other things may come, but when it comes to money, it's very, very difficult for you to just get things coming, especially consistently, because you can get a windfall sometime just happening to you. Maybe you bought Safaricom, you didn't even know how it works, and you bought it maybe at 5 bob, it went to 15 bob, you made money. But to do it consistently, you'll now think, okay, let me now buy another stock. See, Safaricom did that. Let me buy another stock. And that stock is now what goes all the way to zero. Like, let's say you bought Safaricom, made money, then you jump into KQ back when it was 90s shillings per share. And it tumbles almost to bankruptcy.
Is it still listed though?
Yeah, KQ is listed.
At how much? 0 cents?
I think a shilling or two.
KQ.
So you see, you literally need to know how to... But moving back swiftly into that point, that is how Dalia made money. By buying an airline which was it was the cheapest and it was going bankrupt. Then it was salvaged by another, acquired. So sometimes you can just make money. Like Dalia, that time he didn't have so much knowledge about stocks. It was the cheapest. He didn't even know it was going to be acquired. He just bought it. Exactly. Then a few months later, it becomes acquired and shares triple. Exactly. So you triple your money and you feel like, okay, now this is what I want to do. And I think that aha moment for you in trading, in stock, Forex, cryptocurrencies, because even like the moment you make money, like for us, we made money from our $300 back in 2017 to $1,200, lost everything. Cryptos, we made money. Forex, we made money, and that is now what keeps you stuck into the business. I don't think you can be stuck into the business when you didn't see some light, like there's some opportunity here. See stories to I'll make some money, but when you make that money, even if you lose it, you'll feel like this is something here. There's something here. So don't shy off. Just get into the stock market. That is how you'll start learning. You won't start learning how to trade stock markets without putting a cent into it. So put a cent into it, look at how it performs, do some more research. And actually that is what I wanted to promote a lot in terms of stock trading, and especially stock trading. As Ken said, it's heavily fundamental. So you have to be a researcher, like a deep researcher. Like you need to understand even how, because the Fed is the central bank to the world.
Yeah.
You need to understand how yesterday's rate hike will affect even the Kenyan market.
Exactly.
You see? So if you don't do that research and you are a Kenyan stock trader, you just want to focus on Kenyan stock markets, you don't understand globally what is moving markets globally. Inflation is also global, not just a US problem. Here in Kenya, it's very, very big. Oil prices are now at 144 shilling a liter.
They could go higher.
Could go higher, of course. Basically, you need to be a very, very good researcher. And the moment you do your research, your due diligence, it creates confidence in even the stock you're buying.
Yeah.
But if you don't do that due diligence, you'll just be buying into hope, into hype. Because a lot of companies have, even cryptos, they've gained market share just because of hype. Yeah. No utility, no nothing, just hype, and people buying into it swiftly, and you think it can last for long, so you buy maybe this stock somewhere, make some money, like guys who are buying into GameStop, AMC back in COVID times.
You know.
Yeah, you see, like they made some money, but of course, I think GameStop right now is also down a lot. So eventually, if you don't do these things from a point of research, just from a point of hype, of just because a friend of you has told you, hey, last month I bought this stock. No, it's not always about stock recommendations. It's about doing your research. So basically, it's the same as just trading signals. It doesn't work in any market. So signals doesn't work in Forex. They don't work in crypto. They don't work in stock markets. So do your due diligence. Know why you're buying into this stock. Know the shareholders, know their 5-10 year plan, because they always detail that. Today morning I was going through the Safaricom annual report, and they have their 5-year plan detailed. Like they know which markets they are going to conquer next. And
are they going Ethiopia?
Yeah, they're actually starting the operations in Ethiopia very, very soon. I think actually they already they've already kicked it off.
They already secured it, yeah?
So the moment you do this due diligence, you can now invest with confidence, knowing the risks you're taking, how much money should you put into this stock, and why not the same amount into the other stock. So basically that research, that due diligence, that trying to be eager to learn more about how the stock markets work, the history of the stock markets, which companies were there back in the days that were listed out, because companies they also get listed out of the stock markets depending on how they perform. If you perform very, very poorly, another company comes, beats you on market share, and they get into the NSE. So you need to really, really have a good understanding into basically how trading works. It's all about, this is trading, not just stock trading and Forex trading. It's all about risk taking and the reward you're making.
Exactly. Because actually today I was when I was just before we do a show, I like taking at least 30 minutes to look for some information that relates to what you're going to talk about, despite my knowledge on the subject or my previous research. And today I decided to just watch some show, The Trading Bell. You know it?
Yeah.
So I was watching The Trading Bell, and I couldn't just help but think of how, like, in the next 10 or 15 years, the people who will be very valuable, or the people who will be questioned a lot, or who will be sitting in those seats, will be people who are doing trading. Because I feel like most of those people who have actually invested their money in the Kenyan stock market, if they really understood Forex trading, and if they had competent and serious people who are doing Forex trading like the way we are trying to do it, and how we are planning to do it in the future, then I think most of the money that's in that market would very, very fast move to the global markets, because there are more opportunities there.
True.
And you can make way more money in that side.
Yep.
So I think in the next few years, like you're saying, this is all trading. As much as it's a Kenyan stock market, it's all taking part in just that numbers game, understanding if I put in $1 and I'm buying a particular thing with a value, then in the next 2 or 3 years, if the company does well, I could have $3, $4, $5.
Yeah.
It's the same with currencies. If a particular country does well, then I could have some money.
Yeah.
It's the same with commodities. If the cycle changes, then I could have some money. So it's always a question and a matter of thinking about where is the world moving, like you're saying, and how will that impact the Kenyan stock market. So that correlation, that intersection of the Forex market and the Kenyan market will really help in bringing out that market also, because I think in the future it's also going to be a big market, especially if they can. I don't know, but the question I'd have the most if I was to meet the NSE chairman, or if I was to meet the one who's running it, is why aren't we seeing more IPOs?
Jeffrey.
Yeah.
I feel like companies like QuickMart now should be an IPO.
True.
That's a company that should be traded. NCB Bank should be traded. There are very many counters which I think should be traded, and they would attract capital.
True.
Because you can imagine a retailer knowing he can buy QuickMart. Atanunua. QuickMart wamefungua hapa. I'll just buy.
The normal person.
The average person will just buy. Just because when he's told QuickMart is now public and everywhere he's going he can see new branches being open, to him that makes sense that, hey, probably I should buy this share. But the fact that some of the companies that are trading actually on the Kenyan stock market, I personally don't know them. Like some companies are just, like I don't even understand their business model. I don't know what they do. Like I think out of the 65 companies you guys have talked about, I think I understand about a third of them, what they do. The other 2/3, I'm still green on some of the things that they do. So if we could see more counters which are relatable to the public, then we could see things maybe moving a bit. But we don't know the reason why.
Because like on the 65 listed companies, I think only less than 10 are blue chips. Like companies which they've proved consistency in
profitability, and
very few of them. The rest of them are down the drain. Exactly. So there's a lot of I can't say discrepancies, but a lot of sort of loopholes in how we view the market. And even if you look at in the stock in states, there's that deep correlation between the currency, the stock, and even the commodities. Like yesterday when interest rates came out, the dollar was strongly affected.
Yeah.
Nasdaq was up about 3%.
The Dow was up.
The Dow was up, about the same percentages. Like there's that direct correlation between the currency and the
commodity.
The commodity. I also
the index.
The index. I also tend to look a lot at I think I've read a couple of monetary policy releases by the CBK governor, and I'm not even sure if they have an effect on the markets. See, because do investors even look at such things?
That's a very good question.
So
do they even move markets?
Yeah, do they even move markets? Because I remember I was reading I think about 2 weeks ago, I was reading the monetary policy, and they reported that there is no inflation. Imagine. So, like, do you even
believe it?
Do you even know when like?
I don't even know the rate of inflation in Kenya currently.
Yeah.
I know for the US, but for Kenya, I don't.
Yeah. Like yesterday, we were actively. I think all of us were actively watching the speech by the governor, by the chairman. And have you ever heard of Njoroge
updating the country on where rates should be
on Citizen TV, on NTV
every month?
Yes,
all eyes are on Njoroge.
All eyes on him. Exactly. So it shows you the economic market in Kenya is still not a very, very serious market. Exactly. And for 100 years, being in existence for 100 years, it still shows us that the level of adaptability is very, very low. Like very, very few people are still adapted into the markets. And I also want to do that research. Like out of my peers, how many of them are invested into the stock markets?
0.
okay, maybe few, very, very few.
You have
Exactly.
good friends. Make I confidently say
Zero.
I only know Clarence.
Exactly. So you see, we are the future of this market. Are not our parents, not these guys at 70, 80 years.
Those guys, their time is over.
Their time is over. So if we young people are not even embracing the local market,
idea.
it will even mean like the trajectory. And I think it's also a fact. Like back in 2000s, before that's the post-election violence, the stock market was hot in Kenya.
Yeah.
Then the millennials ni kama walikata hiyo kazi. They went to seek maybe other forms of investments. Now crypto is coming up. How will you tell someone don't buy Bitcoin, buy the sijui Kakuzi Limited? You see, he's not heard about Kakuzi Limited everywhere, but he's hearing about Bitcoin as a hot cake. See, so I think we also need a lot of the Clarence coming into the market, a lot of NSC pushing for those education, and I think that is the only way the market will grow, like pushing for education. Even that is the only way. Exactly, awareness.
Because I also feel like, just like you're saying, that's a very good point. If the NSC would try and push their content more, if they try and make people more aware that they exist, if they tried and showed people who have made money out of the NSC, because personally, like you say, just getting invested. Now I want you to show me someone who's made a
market
fortune.
Wizards. Kenyan market
From the
wizards.
Kenyan market. You get
Gurus.
like someone who you know, hey, that guy, man, makes
And not that an
Kenyan.
owner, someone who started by just buying little shares,
stocks. slowly,
slowly,
and building the acumen and understanding how to do it.
Exactly.
So we need more such stories for us even to attract that talent. Because I don't feel like it's a miss of talent. I feel like it's a miss of attraction to the talent.
Exactly. And if you look at even the forms of trading that it allows you to trade, because in other global markets there are scalpers, there's even on individual stocks there are day traders. This Robinhooders. Robinhood is actually it went public. Company that started literally less than I think 4 years ago is already public in the States. And it allows for even younger people, as long as you're above 17 years, you can invest into these stocks. And you see now in Kenya, I don't think if you try to do the trading on the Kenyan market, because they move very minimal percentages
to do that, but even to introduce the trading where you can come in the morning and make some money
in 6 hours.
But it can move.
Yes, but the volume is very, very little.
But
the volume is very, very little. There are only very few big movers. Safaricom is, I think, one of the biggest mover in the
contributes
NSE.
about 40%.
Exactly. So I just buy that one company and just chill with it. So I feel like it doesn't also allow people to come in with diverse forms of trading.
Because you can imagine, let's say you want to do it full time, you'll have a boring career.
Yeah, it's very, very like exactly. You just buy a stock.
Is it leveraged?
I don't know.
I don't think it's leveraged. I don't think it's leveraged also. It's cash. So like because you buy a stock is 3 shillings, 5 shillings. You buy 100 shares, that is 300 shillings. Exactly. So I don't think there's also leverage. So you see, like there's a lot of things that they need to innovate. Exactly. But also, as you're saying, Ken, we are an emerging market. We are trying. Also, like I think comparing us with many other African countries. As I said, we're number 3, so that's at least we're somewhere. So I'm trying to look at that number 54 country in Africa. Do they even have an exchange?
There are only 28 exchanges.
Oh, 28.
Actually.
Oh,
So there are some countries which don't have.
Wow, you
So
see,
in
exactly.
Africa, you still have opportunities. Those are opportunities. You can go and
Exactly.
develop markets in some of those countries
Yeah.
because there are no markets there.
Yeah, because I remember
just
Dalia
innovate.
saying he went to
Those
Asia.
are Developing China.
Yeah.
Kuja kuambia, this is how markets work.
Yeah.
Let's form this system and these systems.
This is how to attract talent. This is how to bring in companies. This is how to, like, if you understand that process, because I feel like the ones actually who open the Kenyan stock market are the ones who are responsible for opening the Ugandan stock exchange.
Yeah.
If you track well, you'll find that some of those people are the ones who are very, very
Yeah, like NSC was open, like they were helped by the London Stock Exchange.
Exactly.
You see.
So you can see even us, we were helped by someone else who was planning and doing other things. So there's a lot of innovation that needs to happen, honestly.
Exactly.
Yep.
Innovation, education, being open in terms of, as you're saying, like we need to know these people who have made money in stocks. Like that is how actually people get attracted into some businesses, because you see, okay, this person A or person B has made a fortune just by trading stocks here in Kenya. But as I was saying, it forces you to just sort of only become an investor. You can't be a trader, like putting swing trades. You buy Safaricom Monday, on Wednesday you're out with 2, 3, 4%.
A short equity.
No. Also the fact that yes, you can't even short the equities, so it just limits you in terms of even the positions you can take.
Yeah,
exactly. So I think I can put that as my points then, Caleb.
Yeah. So man, to bring more facts, minimum setoma facts when it comes to stock, because also me I'm learning. Yeah. So I'm just doing some research here. I'm looking at different markets around the world. So I want you guys to know how, just to compare how Kenyan market is compared to how the overall world is. Okay. So I want to give you market caps for Kenyan companies, a few of them, and also abroad companies. Okay. So that you see how much of a journey and opportunity we still have in Africa, like you're saying, Taras, to grow and become as big as these other people. Okay. And where there's opportunity, there's money to be made. So biggest company in the world in terms of market value, market cap. What is market cap? Market cap is market capitalization in full. It's basically where you take the total outstanding shares, multiply it by its value of each share. You get the market cap. So Apple, number one, $2.8 trillion. Okay, $2.8 trillion. That's about 280 trillion Kenyan shillings.
It's already 100 times more than the Kenyan capitalization. Just that one company.
Just one company.
It's bigger than the whole.
100 times, not bigger. 100 times.
Kenya
bigger.
GDP is $100 billion. So just imagine Apple alone. Number 2, Saudi Arabian oil company, Saudi Aramco, 1.8 trillion. Okay, dollars. Microsoft, number 3. They're not ranked in order, it's just thrown around, but top 10. $2.3 trillion. Okay.
So it's above Saudi Aramco.
Yeah. Amazon, $1.6 trillion. Okay. Now the trillions. I'll come to the Kenyan market. Alphabet, $1.8 trillion. Okay. Meta Platforms, those who don't know Meta Platforms, previously known as Facebook, $900 billion. Tencent, this is a Chinese company, $500 billion. Tesla, most of you know Tesla, it's also a $1 trillion company. Alibaba, most of you know Alibaba by Jack Ma, $350 billion. And last but not least, Berkshire Hathaway by the legendary Warren Buffett and Charlie Munger, $700 billion. Okay, so that's top 10, just top 10 around the world. Now let's come to Kenya.
Market
capitalization, and I think I've explained it well to the viewers. So
Tencent, just a bit. Tencent is the only Chinese company there,
and Alibaba.
Okay.
Yeah. So leading companies in Kenya 2021 by market capitalization. Number 1, Safaricom, $13 billion. It's quite big, but
it's a lot also.
It's a lot, but it's $13 billion. Okay, but you can't compare it to the likes of Amazon and the likes Berkshire, Apple. Okay, now the following companies that follow the Safaricom, the about 11 of them, if you combine all of them, they reach half the market cap of Safaricom. Half. If you combine all the next, so the next one we have, number 2 is Equity Group, $1.3 billion. $1.3 billion. KCB Group, $1.2 billion. EABL, $1.1 billion. Cooperative Bank of Kenya. Now all these ones.
EABL, $1 billion too.
$1 billion to imagine. These are unicorns. In America, these are called unicorn companies.
100 years in business. Apple is back in 1980s, 70s.
Exactly. You can, and Facebook
near 205.
Imagine.
Tesla 2010.
Now that's why they say the American dream. Now if you come now, everything below
it's a dream.
American dream. Elon Musk, if you read the Elon Musk book by Ashley Vance, he said he couldn't see his dream being actualized in Africa because he was born in South Africa. So he went to Canada, stayed in Canada for some time, then entered US. And then now every other company that's below EABL is less than $1 billion. So you have Cooperative Bank, then Standard Chartered.
Hedge funds are coming for these people.
Exactly.
I send the next 15 years. Hedge
Kina
funds will be
Mansa,
there. Hedge funds.
yeah,
Zinakam basi.
TradeSense. So we have now Cooperative Bank, Standard Chartered Bank, Absa Bank. Notice the amount of banks. Banks control the country. British American Tobacco, Kenya, BAT. Then NCBA Group, I&M Holdings, Stanbic. These are just banks. And then we have Kenya Electric Generating Company. Kenyan. So of all those that I've mentioned below, I did the math. Equity of all those I've mentioned, they have a market cap of $7 billion. All of them combined. Others just Safaricom.
Would tell us specifically each company? Equity you said 1.2, KCB 1.1.
Equity is 1.3, KCB 1.2, EABL 1.1, Cooperative Bank 700 billion.
Billion or million?
700 million, sorry. 700 million. Standard Chartered for 90 million. Absa for 30 million. BAT for 30 million. NCBA 379 million. I&M 370 million, Stanbic to 90, then Kenyan to 70
million. Wow. One trader trading $300 million is pulling more than Kenyan.
But I believe these people, they're really being come for. A lot of companies in Kenya but go private. So these are public companies.
Because if you look at companies like Cellulant, they've raised more than $4 billion.
Even Market Force, I'm sure they have a big market cap. So these many companies are still private.
Okay, that makes sense.
So which can still help add
that
up.
brings us back to the question: why aren't those companies coming to public market?
Good question.
Yeah, those companies should be in the public market,
and they really help the economy and the GDP of Kenya grow.
And create opportunities.
Exactly, and attract more investors. Because there'll be better diversification. If you look at what I've just mentioned, it's most banks.
90%.
Just banks. Yes, just banks. Mostly. Yeah. So that's what I was comparing. Then another thing I was also looking at is I was looking at how companies have grown in terms of employment compared to Kenya. Safaricom is big.
Employed?
Yeah. Safaricom is huge. So if I just show you just a couple, Apple has employed about 150,000 people, employees. That's Apple. Saudi Aramco, 80,000. Okay. Microsoft, 180,000 employees. Amazon, 1.3 million.
Employees. Amazon is big.
Employees. Imagine.
Those fulfillment centers, bro.
A million.
A million people being fed by
one man.
By this one man.
But those are systems.
But I think also for that there is agents, like how Safaricom has M-Pesa agents.
I'll come to the Safaricom one. Okay. So far to go Amazon. Okay. Then Alphabet, 156,000. Alphabet, for those who don't know, it's by Google. They own Google. They own YouTube. 156,000. Okay. Meta, which is Facebook, 77,000. Tencent, 112,000. Tesla, which most of you know, about 100,000 employees. And Alibaba, to 50,000. And last but not least, Berkshire, about 360,000. So I was looking at the
360,000.
Yeah, that's Berkshire. So now coming to the Kenyan market, we're actually doing quite good. So I was looking at Safaricom. So facts about Safaricom. Employs over 5,500 staff directly and over 500,000 indirectly.
Agents.
Think what you're saying now.
Agents,
Through agents. They're not being paid direct, but they're working for Safaricom. Has approximately 5,000 networks across the country. And like you were saying, was it you or Ken Otaras? 50% of employees and 32% of senior management working at Safaricom are women. So which is quite good. So 50% of employees are women and 32% of the senior management are women as well.
Okay.
So that's Safaricom.
I'm observe 2/3 gender rule.
More or less. Yeah. Then we have EABL. In terms of people it's employed, not so much, but they've not really updated what I'm seeing here. I'm not sure, but what I'm seeing here, this was as per 2014. This is another thing about, I've not done deep research, but one thing about the Kenyan market, also doing a lot of research, it's hard to find some data.
Exactly.
There's
also a big business there.
Yeah. If you go online and search abroad, UK, US companies, it's easy. You'll get data like this for free. But Kenya, it's really, but I'm seeing one website saying over here as of 2014, EABL had 1,600 employees.
Only.
But we'll do more research on that. I'm not sure. This one is saying KCB on the other hand has about 5,000 employees. Okay.
Equity.
And Equity has about 9,000 employees as of 2019. Centum, I need to check. By the way, I've not talked about Centum. Yeah. But it's quite good because one thing from our standpoint, I'll check it. I'm not saying they're not bringing anything here. One thing from our standpoint, why we're looking at this and why we're looking at employees and all that, it's because we as people in business, we know how tough it is to employ people. We might say it just saying, hey, they've employed, but having 1 million people, even just 1,000 people working for your company, it's not a joke. Because one, already you're paying the minimum wage. So if you have 1,000 people and minimum wage in your company, let's say it's what? Can we take? 50K? 100K?
You can?
Yeah.
Yeah. Kenya is 25,000.
No, let's not go low. Let's average. Let's go 50.
Okay.
So if you're paying people 50,000 every month and you have 1,000 employees, that's about 1,000 times 50K.
It's about 5 million.
5 million, yeah.
5 million. Then
500,000.
it's 50 million.
50 million, yeah. 50
Yeah.
million.
So you're paying 50 million every day. Every month, I mean, you're paying people. That's in a year about 600 million Kenya shillings.
Yeah.
That's a lot in terms of just $6 million just employed. So it's important to look at that. So anyway, that's I don't have anything much. I was just looking at that list of facts in terms of employment, in terms of market cap, in terms of people who are running the companies. Like we know Centum is James Moria, Ndegwa, and Safaricom. There's another person we really should mention, which is very important, Keroche. She's a lady.
Yeah.
And leading a very big company. It's called Keroche Breweries. Yep. Yeah. So Keroche is also, is it public? Is it? I don't know.
I don't think it's public.
It's not public. Yeah. But those are the people who are saying they're private, they're quite huge, but they're not being traded online. So yeah, that's it from my end, Ken.
Okay, so for me, I think to just sum up, I'll add some meat to what you're talking about.
Yeah.
Basically, what you're telling people about the market caps and the people running and the number of people who've been employed just boils down to a simple thing, valuation. Because the next question I'd ask you is, yes, you have 5,500 employees, but what's your turnover? If you're not making good money, then your valuation, what's your margin? Because you'll find that, let's say some companies like Amazon, which you said has 1.6 million people, they have very tiny margins because it's a retail business. So it's not like they make a lot, they just make little money from solving that distribution problem and the retail problem, because they buy things on wholesale and they can sell it like that. So they end up making money based on volume, and I think that's why they also have very many employees. But if you look like companies like Apple, their margins are quite strong. Costs of them maybe creating an iPhone is they just sell for you the brand. Like they did a very good job of marketing such that as much as they may sell for you an iPhone at a price which relative to other phones is quite cheap, you'll still buy it.
The hardware.
Yeah, because they have done.
The guys with the biggest margins, I think, are people like Microsoft.
Yeah,
software
Microsoft,
guys.
it's a
So
software
just duplicating
company.
the software.
So if you look at the profitability of that company, it's way higher. Or a hedge fund. Think of a hedge fund.
Yeah.
A hedge fund just pulls money and trades it and makes profit out of that. So also the profit margins from that are quite big.
Do you know the highest paid hedge fund manager last year was who?
Jim Simons. No, that Easy England. Yeah. Someone.
No, but he was top 5.
Who was that?
You're close.
Ray Dalio.
No.
Kenneth Griffin.
Yes.
Okay, he made
$2.5
billion
payouts. Hedge funds are huge, so you guys check out hedge funds. That's the goal. That's where we're going. And like Kenny's saying, it's because they have big margins.
Exactly.
Yeah, you can't pay someone 2.5 billion and your margins are, because basically what do hedge funds do? Invest in the markets, reap profits. Yeah.
So I can easily say actually now I'm even more confident on pursuing my career. I can say I'm creating something valuable. Because you can imagine if you start a hedge fund and you're running it. If, for example, I just raise $100 million, which is about $10 billion shillings, that can be managed by one trader.
Yeah.
One single trader trading one market, not even trading multiple markets diversified. Just trading one market.
Yeah, and you know they're still considered more or less a retail trader. Institutional
Yeah.
traders start
Exactly,
from
at
like
$100
100 million.
Yeah, because if you have a hedge fund which is actually less than $1 billion, it's still small.
Yes.
You're not even in the scale of hedge funds being rated. Yani uko huko
Uko bado
chini kabisa.
institutional trading.
Exactly. So I still feel like the future is bright. Actually, it's nice we tackled this topic. It's really opened our eyes to the opportunity that lies ahead.
And as you continue, it's important also to mention, you remember what I've been talking about. I sent to you, yeah, the data from those people, the Henley, the company.
I've not read it.
Yeah.
You can give people information
But
on that. I've
one
not read
information, because they really focused on the African market, and here I have that data. It's actually a very good data that came. So here I have it: wealth management sector in Africa. Okay, but before I just go that, since we're talking about the African Kenyan stock market, it's important to mention about also how many people are millionaires in Kenya.
Yeah.
For people to get to know
relative to other countries in Africa.
Yeah, so
And
we
it's-
have
first of all, I think before you even tell people how many people are millionaires, it's very important to distinguish who a millionaire is, because I feel like the
Okay.
Kenyan people assume ukipata 1 million
Yeah.
millionaire. Yo si
Yeah.
wewe si millionaire.
not even close.
You're not even close.
You need to 100x.
Exactly. So you're only a millionaire if you have $1 million in assets and
Yeah.
in cash or in net worth.
So
$1
what
million
they,
plus.
what they have here, the bottom of the food chain where even you start being ranked is called mass affluent. These are individuals with wealth over $100,000 or more, so 10 million Kenya shillings or more. Then you become a millionaire with $1 million or more, $1 million, not Kenya million. And then you become a multi-millionaire if you have $10 million or more. You become a centimillionaire if you have $100 million or more. And finally, you become a billionaire when you have $1 billion or more. And now we're starting to see a lot of centi-billionaires who have 100 billion or more.
And
Okay.
we'll soon have a trillionaire. We'll have more than $1 trillion. That guy will basically come from developing one of the best AI companies. I can bet on
One
that.
person.
One person maybe. We'll see.
It's too much money, man. It's too much money. So,
But anyway, first of all, to
Yeah.
just clear up before he goes on,
Yeah.
the reason all of them have been tabulated in dollars is because dollar is the reserve currency. So you're only a millionaire if you have $1 million plus. Don't say you are a millionaire ukiwa na 1 million shillings. You're
That's
bado
nothing.
umesota.
walai,
You're
that
still
money
broke.
can go.
You should work hard and look for more money. But anyway,
Yeah.
now go on.
So hopefully our goal, the three of us, is to get on Forbes 30 under 30. So in the next 5 years, we might be millionaires, dollar, not Kenya shilling. Anyway, Africa statistics, private wealth, okay? There's $2.1 trillion total private wealth held in one continent, okay? We have approximately
$2.1?
$1 trillion total private wealth. We have approximately 136,000 millionaires living in Africa. This means $1 million or more.
And you know in the US there are how many?
How many?
Millionaires?
How many?
20 million millionaires.
Oi,
20 million millionaires.
we have a long way to go.
You have a long way to go.
And then we have about 6,700 multi-millionaires.
So that's like almost 20% of Americans are millionaires.
10%. They're about 300 million. Hata mi nilikuwa shocked hivyo. About
Walai.
10% of Americans are millionaires. Such. Actually, it's 22 million, I think. 20.1, 22 million.
And China?
China was a million or so.
Yeah, Ken is right. 21, 22.
Yeah, 22 million. So
22 million millionaires in the US.
Jambo, it's the American dream. Wewe.
See joke?
Kingi huko kuna
That's
10%
almost
chance already ya kuwa millionaire. Kenya ni less than a
10%.
percentage.
Because if I continue what Ken is talking about, now if I continue just, there are 6,700 multi-millionaires, the guys with $10 million or more, 305 $100 millionaires, centi-millionaires, and only 21 billionaires living in Africa. Only. Okay? So now if you come and just look at the Kenyan. So South Africa, we are ranked, actually they're calling it the Big Five. So Kenya is among the Big Five in terms of wealth markets in Africa. So
That's Kenya.
So number one is South Africa. South Africa has 39, let's round off, 40,000 millionaires going up, okay? and has 5 billionaires, South Africa. Egypt is number 2 with 17,000 high net worth individuals, millionaires, okay, and 7 billionaires. So they're more than South Africa.
7 billionaires.
Yeah, Egypt. Nigeria comes in at number 3, which Nigeria has really underperformed because of the number of people.
Yeah, because there are about 300 million people also.
And they only have 10,000 millionaires and only 4 billionaires. So this basically tells you the wealth gap is very huge.
Yeah.
It's very, very huge. If you have 300 million people and only 10,000, as in Kenya, Tatukombali now, say, and we are much less than them.
So the wealth gap there is way.
It has to be huge. If you're seeing this number of millionaires only, there's a lot to be done. Morocco comes in at number 4, 5,000 millionaires, only 3 billionaires. And then Kenya comes in at number 5 with 8,500 millionaires, 0 billionaires. Okay, I'm sure they don't take the likes of Kina Mama Ngina, Moi family, those things. They can't really tabulate where the wealth is from, but I don't know. But over here, what they've done, 0 billionaires. And just to give a shout out to 2 other countries with billionaires, that's Tanzania has 1 billionaire, which I'm sure is Mohamed Dewji, and Angola, which has 1 billionaire.
She's a lady.
I think so. It's a lady, yeah. That lady is the daughter of that king or president, yeah. Yeah, so that's one important factor that I wanted to share. Now, as we continue moving forward, why we like this industry we're in and why you guys who are listening because you like this industry you're in or maybe you want to start, is the Africa's, in terms of the wealth management, how much money is in the African market, okay? So the wealth management sector, I think I'll leave a link for this below so that you can just go Google for yourself and check it out. So in Africa, we have $140 billion amount of high net worth individual wealth tied up with wealth managers in Africa. So
$40 billion.
$140 billion.
Dalio too.
Yeah. If you compare that with America, only Dalio has about $220 billion.
Should move.
Just one company. So anyway.
But you can't blame us. In Kenya we have 0 hedge fund. Zero. Hakuna hedge fund too.
Lakini America ukiwa kadi yenyewe unaweza penya. Kenya nimeona bado unaweza wakadi.
It's all about
serious
regulations and stuff. Like we have a friend trying to get a license and 2 years into it, bado
Still.
regulations.
Regulation. Na niju, because I remember the story was telling us, niju msemoja uko ndani alikuwa amekat. Just
imagine.
that.
Any an emotional decision.
Imagine,
It's
this
costing
guy
you
is costing
time.
not only you, the
The
Kenyan
Kenyan
economy.
economy.
You can't even grow because of this one person's G. Anyway, so
Primitiveness.
the typical wealth manager targets individuals with over $500,000 in investable assets.
Pardon?
Typically, wealth managers in Africa target individuals with over $500,000 in investable assets. Okay, then yeah, more or less. So
So if I'm trying to get an investor, 50 million is the minimum.
Yeah.
Investable assets. You have to see net worth.
Investable assets.
Any shika.
Like,
Yes,
yeah.
exactly. Like
Now,
give me 50
Give me
million.
50 million.
Yeah.
Naoni waseta wanane peke yake.
So my point to say on this one is just to mention that there's a lot of growth, a lot of opportunities coming up in Africa. A lot of countries are being regulated now in terms of allowing hedge funds to come, Forex to come, innovations like we're talking about in stock markets to be improved, which will attract even foreign investors and all that. So yeah, I think that's basically it. I think that's a good place to finish.
Yeah.
Yeah.
It's actually have finished with a very good start.
Yeah.
Some very good stats.
Finish the good start.
good
stats.
stats.
Oh, stats.
Statistics.
That you're sharing with people.
And they've also, just to finalize, estimated growth in the African wealth management over the next decade, driven by strong assets under management growth in South Africa, Kenya, and Mauritius. So Kenya is on the map. So you guys don't sleep on this. There's a lot to be done.
Traders you've heard, there's a big opportunity. If you can devote your time into it, you can easily make a fortune in an industry where it's easier than many other places to make a fortune. So if you're following this path, follow it knowing that, especially if you love it, just don't follow it for the money. But if you're lucky to fall in love with what you're doing or what's currently happening in the Kenyan market, then you have some chances of joining the 8,000 people. You've said 8,000. I think you should actually keep that stat such that let's let's do a review after the next 5 years and then another 10 years. Because if you do yearly, obviously you won't see much growth.
Yeah.
But I want to see in the next 5 years and 10 years to see if that growth is exponential or if it's.
Yeah.
And that's why
Because some places it's declining. Like South Africa, the highest they had reached, according to the data here, was 48,000.
But now it's going lower.
It's at 40,000.
Yeah.
So they've lost. But reason being is not that all of them have lost wealth. Most of them have relocated because they're saying from South Africa alone, they're about 20 billionaires, but only 5 of them live in South Africa. So a lot of money has gone away. And number one being, of course, Elon Musk. He was born in South Africa,
but he left.
Yeah. So
are these people who made money in South Africa then left, or they left earlier and made money in US? But
okay, they didn't get deeply on that point. They just said South Africans. Yeah, I think it's both as well.
Combination of both.
Yeah.
So for me, I think one thing I've also observed is how easy it is to launch a business in the US relative to how hard it is to launch a business in Africa.
Yep.
Because creating wealth in Africa, basically, from what you've just stated, is not a very, very easy. The economy itself does not support you to create that wealth. Because if you launch something, let's say, like I remember Lawi was telling me Discord was launched in 20.
I think 17, 18.
Serious.
And it's worth $10 billion.
FTX was launched in 2017. Founder is $23 billion. So
tells you a lot, guys. Tells you a
all
lot.
in the US.
Yeah, tells you a lot. Tells you a lot. So, but I also feel like that means there's some opportunity back home if you can also, like, there's so much growth potential back here other than there.
Especially if you target the whole of Africa. Now instead of targeting just Kenya.
Yeah.
Target Africa yote. Now you can compete with the whole of America.
The whole of
as a continent, not as one country.
Yes,
that one yet to
one country, obviously.
And also me, I also feel like as Africans, we also need to increase our risk appetite.
Yeah.
Americans take risks.
They take risks. That's true.
Yeah.
They take
in
risks.
Africa, even before you get an investor to just take a risk with you.
With you, it's very hard.
Very, very
so
hard.
most which is true, because if you look at,
that's a very good point, because you're looking at it both from the from the investor perspective and from the entrepreneur perspective. Both of them have to be willing to take risks.
Exactly, because that is where the reward comes.
Exactly.
And like I was saying, if you look at statistics, especially once Market Force raised capital, and if you go online and just see, because Africa last year as a whole, we raised about $5 billion, which pushed 5 companies to become unicorns. Unicorns are companies which are still private but are worth $1 billion or more. Most of these investors come from outside.
Yeah,
they're not local. They're not even local. Africans.
Exactly. That's true.
It's all America. You're seeing this America raised capital to invest in these companies. So still have a lot of ways. That's
also sad, because unfortunately, as much as that wealth has been created in this country, eventually it will go back
to
US. Seriously.
Yeah, true. Tax italipo huko.
Everything will be paid.
Capital appreciation on that side.
Yeah, once he makes an exit, he's leaving. So he made some opportunity out of your not willing to take risk, made some money, took it back to the
then country. we should do more research and start a rally or campaign of how we can help. Kenya needs to grow. Africa, man, we're too slow.
Yeah, we're too slow. But there are very many things. Because one is what Lawi have said, people are not willing to take risks. Another thing that I'd say is work ethic. If you look at a country like China, if you look at the US, in the US hata kunanga time ya kudozi. You're on your
people
feet.
work 3-4 jobs.
Yeah, you're on your feet.
Yeah, true. People work 3-4 jobs.
24 hours. You get. If you go to China introduced 996. People are willing to work 9 hours, 9 to 9 for 6 days a week. Kenya employee 5 ashajitoa. Before 5 alifunga kwanza akili 2.
And another important
the
factor,
other 3 hours alikuwa anafanya
adding on what you're saying, which is very hard for us to compete, even investor wise, guys, to invest in the stock market, all this is our minimum wage. You can't compare those guys, man.
Exactly.
Our earnings, guys will earn 24,000 in 25,000 minimum wages or in 1 month. Abroad, you earn, if you work nicely in a good day, minimum wage, like if you work at McDonald's for 1 day, you earn at least $120.
That's a lot.
It is 12K. In 2 days, you may earn minimum wage ya Kenya mzima yote. So there's a lot to be done.
But I feel like what Caleb have said is very, very important. For me, I'd actually try and see how, like I'd propose how we can push more smart people into entrepreneurship. Because personally, I remember one time, looking back at some of the people we were competing with in school, most of these people are very, very smart. Nowadays, most of them don't. They're just complacent. They don't want to put their brains into solving big problems like entrepreneurship
And you see what you're talking about from the book Originals, your book Taras by Adam Grant. It was a very good. He had a very good analogy. He was talking about why child prodigies do not become successful in future. You know why? According to his explanation, it's because they lack originality. When they finish school and all that, they practice. They become perfect at what is already established. You get? They become best musicians. If you go play piano, they become very good piano players, but never create any music.
They don't come up with
They play
anything
nice
new.
Beethoven music, what has already been done. But coming up with what is new, being original, doing what they feel
Because that's
like doing.
precisely what they're doing. Like,
Exactly.
most of them are just doing things which have been done before,
Yes.
but doing it
doing
at
it
a
good.
high level.
They become perfect at what is already established. They lack originality to create new. So this person says practice makes perfect, but does not make new. So those people you're saying, they used to be smart in they come out here, they find things established, they say can become very good at that. But they don't want to become original and create something new. And that's a very important factor.
Exactly.
Yeah, so for me, I'd push more. And that also comes from the parents' perspective, because I feel like also parents stand in the way of young people pursuing new
Many
opportunities.
parents, many.
Yeah.
Safety.
So, kuna culture nini inafaa
There's a lot.
kuletwa.
There's a lot to be
Like,
done,
you
man.
need to change a lot about how people look at and view things, and
Yeah,
the
bet.
opportunities they pursue. And
Yep.
then you can at least find a way where we can create some more wealth, create more opportunities for people, and maybe develop our country, improve our GDP. But oh well, let's see how the next 10-15 years will be. We'll be probably doing this still, and we'll have more data on how
We'll
things
refer
are
back
really-
to this
Yeah.
podcast.
Say, okay, this was a video we did about 10 years ago. Now, this is what is currently happening. So we'll see. We'll
Cool.
see and we'll talk. So with that, guys said, we'll stop there.
Yep.
We'll catch you guys in the next one.
Before we stop, let's give a shout out to our partner and our sponsor for the podcast, Pepperstone. So Pepperstone is a regulated broker here in Kenya, licensed by the CMA. If you're a trader, new or already trading, consider switching to Pepperstone, and they'll give you the best trading offers they have for you. Good customer services. The offices are in Westlands, the Oval office, right?
Yeah.
Exactly.
no
So if you have an issue with them, just walk into their offices and they will be able to sort you out. So Pepperstone is the best broker we recommend here in Kenya. And if you're trading or not trading, consider opening an account with them. The link is on the description below. Thank you.
Peace, people.